Hi, welcome to the East Asia Econ YouTube channel. My name's Paul Cavey. I'm the founder of East Asia Econ. Now today I'm going to be looking at Japan, in particular looking at the fiscal situation and what's happening with the JGB market. That's obviously in the news a lot. It's obviously important. And I'm going to have an argument which I think is a bit differentiated from what the rest of the market is saying, which is basically a lot of this fiscal concern is really overdone and JGBs right now are starting to look cheap. Now, before I get into that, I have three requests. The first, if you watch this video and you find it interesting, please do subscribe and also recommend it to friends and other people that you know as being interesting on what's happening in East Asia. That would really help me a lot. The second thing is please check out our website, eastasiaecon.com. On there, you'll find a huge amount of information about everything that's happening in the big economies of East Asia. That's China, Japan, Korea, and Taiwan. We do a lot of things looking at all of the daily data, and also there's a lot of interactive charts. There's some visualizations where you can look at, for example, the growth in China's exports around the world. And there's also a lot of articles discussing what's happening in the region. So if you're interested, you can go there, you can sign up and start to receive either free emails, or we have some services for individuals where you can get a daily email summarizing what's happening in the region. The third thing, if you're a professional investor, then our comprehensive service is really aimed at you. We have everything we cover is in the data. Whenever there's important data released in the region, we have analysis looking at what that means for the cycle. We do a lot of work looking at the structural issues and then try to think about what the market implications of those things are. So if you're interested in a very comprehensive service looking at tracking the economies of East Asia, then please do get in touch with me directly at paul@eastasiaecon.com. Now, on with all of that out of the way, on with the show. Now, as I said, what I want to talk about today is the fiscal situation in Japan and what's happening with the economy there. And you will have seen, it's very difficult to be unaware that over the course of the last few weeks, there's been a lot of volatility in the JGB market, the market for Japanese government bonds, which is the equivalent of the US Treasury market in the US. This is how the government in Japan finances itself. And as you're probably also aware, the government in Japan has a huge need to finance itself because over the course of the last 20 to 30 years, Japan has run a lot of fiscal deficits and as a result has ended up with a huge amount of debt. And that debt is now up to over 200% of GDP in gross terms, much bigger than any other country in the rest of the world. So the fiscal situation is obviously important. And obviously, if interest rates start going up, then the Japanese government faces an increasing bill. Because if you have debt at over 200% of GDP and interest rates on that debt rise very quickly, then suddenly you're left with the situation you have to pay a lot more money back than you did before. And that eats into the fiscal position that Japan has and therefore makes the fiscal situation worse. And that, I think, is what the market is currently concerned about, that Japan finally, after many years of people saying that Japan is going to run into a fiscal crisis, Japan now is running into a fiscal crisis. Now, the immediate trigger for that is not the fact that debt is over 200% of GDP, because it's been there for quite a while. And in fact, over the course of the past several years, even before the COVID pandemic, but particularly in 2020 and 2021, debt has increased very quickly. That wasn't a trigger for the market selling off. What has happened is, one, that over the course of the last few years, the BOJ, which was buying a lot of Japanese government debt in a means to keep monetary policy in Japan very easy, as a result of that, inflation has started to pick up. In that process, the Bank of Japan has stopped buying a lot of that Japanese government debt. So the demand for bonds is less. When the demand for bonds is less, then you see interest rates starting to go up. And so that's one of the things that's going on. The second thing is that inflation has started to rise. So the reason that the Bank of Japan has been intervening less in the market over the course of the last couple of years or so is because since 2021, Japan has had inflation. So you remember, the reason why the Japanese government, the Bank of Japan, loosened monetary policy and started to buy so much Japanese government debt back in 2013 was precisely because there was no inflation. This was an attempt to loosen monetary policy, to get the economy going, to produce nominal growth. This wasn't aimed at being a permanent state of affairs. because this was a policy aimed at producing a specific result. That specific result was higher inflation. And as we've seen since 2021 or so, and as this chart shows very clearly, since 2021, inflation has picked up a lot in Japan. And it's now running, it depends on the number you look at, but essentially inflation is around the 2% target that the BOJ has been looking for when it started to first loosen monetary policy aggressively back in 2013. So that's the second change. We've got the BOJ changing its policy. That is in response to the second thing, which is inflation rising. The third change that's happened, which really has been the trigger for the big changes in the market over the course of the last 3 months or so, is politics in Japan. And in particular, there's been the election of a new Prime Minister Takaichi, back sort of late last year. She took over as the president of the LDP. And then after that, in the last couple of weeks or so, she's declared an election, a national election. And the reason for doing that is because the LDP, even before Takaichi, was a minority government. So the Prime Minister presumably fears that in a minority government position, she can't do everything that she would want to do. At the moment, partly because of hostility with China, there's been a big increase in the popularity of Prime Minister Takaichi. And as a result of that, she feels like she's in a position to call an election, which is now happening and is scheduled for February. So there's a lot of political changes that have happened. Now, in that, it's important that Takaichi has come in and has criticized the fiscal policy of previous governments. And that criticism has been that fiscal policy has been too tight, that the government that the economy still isn't in a very good state. There's still a lot of need for fiscal easing, and Japan has the room to do fiscal easing. And it's really that context that has created a lot of the fear in the markets. Now, that's been sort of reflected in probably 3 particular fiscal events over the course of the last few weeks or so. The first is that soon after taking office, Takaichi's government implemented a supplementary budget. Now, supplementary budgets have become sort of par for the course in Japan. That there's the initial budget, which is announced sort of at the beginning of the fiscal year, which in Japan runs from April through to the following March. Then often there's a supplementary budget. So during the course of the year, the government decides it either wants to spend money or increase more taxes or whatever it might want to do. So there's a change in the initial budget, and that's introduced tends to be sometime in the second half of the year. So when Takaichi took power, one of the first things the government did was introduce a supplementary budget. And there was a lot of headlines at the time that the supplementary budget was the biggest it's been in several years. And so this was the first sign that Takaichi was implementing her pledges, that fiscal policy was too tight, and she was doing something about that to loosen things up. That was the first event. The second event was the 2026 fiscal year budget. Now, that so far is only a draft, but the draft of that has been headlined as being the biggest ever. So expenditure, again, is rising. And again, looking at that headline, you could certainly understand why the market gets concerned that the government is spending too much money, because why should the expenditure be increasing when the fiscal situation in Japan is quite poor? So that's the second thing that's happened. The third thing, which I'll get into as probably being the most consequential, is that after announcing the election, Takaichi has made a pledge to cut the sales tax for food items for a couple of years, for a temporary period of a couple of years. So that is something that was announced in one of the press conferences to announce this election campaign that the government has now started on. Now, that is particularly important. And why is that? Because cutting the sales tax for food items only, the sales tax is 10% in Japan. It applies to most consumer items. So this isn't cancelling the sales tax entirely, but reducing it for food items still is estimated to cost around 5 trillion yen a year, which is about 1% or thereabouts of GDP. So it does look like it's quite significant. The second thing is, in announcing this, she didn't say how it was going to be financed. Now, she did say that it wasn't going to be financed through issuing debt, which I'll come back to and I think is important. But in terms of the market and the headlines, this is therefore something that looks like, a big fiscal ease. It's not being financed. This is a big stimulus to the government. And again, when you look at Japan from a international perspective, then it looks like how can Japan be doing these things, because fiscal debt, the debt is already over 200% of GDP. The government doesn't have a lot of money. Why is the government embracing a further fiscal easing at this point in time? Now, that I think is the narrative that explains the fiscal side of why the market started to be concerned about JGBs. And it's because of that you see interest rates rising on JGBs, because if you think that the government isn't going to be able to pay back debt, then it doesn't make sense to hold these bonds, and therefore the price falls. And as we know, there's an inverse relationship between the price of the bond and the interest rate. So this explains why interest rates in Japan have been rising one of the reasons why interest rates in Japan have been rising quite quickly over the course of the last 2 to 3 months or so, and in particular over the course of the last few weeks. So that's the narrative. So how to challenge that? Like, why would I argue that this actually doesn't, or a lot of this concern is really overdone? And there's some specific reasons to get into. So let's take them one at a time. I think I've got about 5 to try to highlight here. So the first is taking the example of the supplementary budget, or indeed of the budget for fiscal year 2026 that was announced. Now, in yen terms, you can say that these things are quite big. And so you can look at the fiscal year 2026 budget and say it's the biggest ever, therefore expenditure is very high. But this is very misleading in the sense that if you look at a normal economy, in the sense of most economies in the world, they grow over time, right? Because there is inflation, and therefore nominal growth, nominal GDP tends to rise over the course of time, except, when there's a recession and the economy contracts. But otherwise, in a normal economy, the amount of outstanding yen, if you like, that's produced in the economy, that would tend to rise over time. Now, in Japan, for a long time, that didn't happen because there was no inflation. And so the economy wasn't growing. If the economy wasn't growing, then nothing else would grow either. And so government expenditure wouldn't rise in a situation where the economy as a whole wasn't growing. Now, as I've said, one of the reasons why the economy is normalized, the BOJ isn't buying so many bonds as it was back in 2014, 2015 time. The reason for these things is because there now is inflation and the Japanese economy is growing. So why is that important? Because when we look at the expenditure for 2026, or we look at the expenditure in the supplementary budget for 2025, it isn't increasing as a percentage of GDP. It's increasing in absolute terms. But again, that would be expected in a growing economy. If the economy is growing and there is inflation, an expenditure level wouldn't buy as much as it did previously unless that expenditure level went up. So what we see actually, and as this chart clearly shows, there isn't, or as much as expenditure is increasing in absolute terms, it isn't increasing as a percentage of GDP. And it's as a percentage of GDP which is really determining how big the government is. So I think in the first instance, a lot of this concern that both the two of the fiscal events that we've talked about, that these are signaling a big loosening of fiscal policy in Japan, that just isn't true. That's not in the numbers. It's not what the government has announced. So that's something to be bearing in mind. The second thing is obviously, like, when we think about these things, we shouldn't just be thinking about what's happening with expenditure. We also need to think about what's happening with revenue, because obviously the government has to get the money from somewhere to be able to spend. Now, if it's not getting it from taxes, then it has to borrow as the only way to be able to finance expenditure. And so the other thing to be bearing in mind is this chart, which is looking at revenue in Japan over the course of the last few years. Now, this shows a couple of important things. The first is a structural change. So if you go back and think about Japan, or look at Japan from 2005 until now, expenditure is basically flat as a percentage of GDP. There's some cycles around it, so expenditure goes up a lot during the COVID crisis and then comes down again. But expenditure generally as a percentage of GDP hasn't really changed very much. What has changed is revenue. Revenue's gone up by about 5 percentage points of GDP since 2005. That's one thing from a structural perspective. The other thing that's important from a cyclical perspective, when you look at fiscal revenue during the course of each year, which we can map between the initial budget, which is made at the beginning of the fiscal year, through to the supplementary budget, which again tends to be announced in the second half of the year, and then the final results of actually what happened during the fiscal year, in the course of that process, over the course of the last 3 to 4 years in particular, every time revenue is higher than it was predicted to be. So the supplementary budget revenue is higher than it was predicted to be in the initial budget. And then when the budget is released at the end of the year, or the finalised results of the budget, that tends to be higher revenue than was forecasted in the supplementary budget. And there's a few reasons why this is happening. And you can argue this is, and you might have seen some experts and some previous policymakers, in fact, in Japan, arguing that this is all a bit bogus, that this kind of cyclical increase in revenue is not something that's sustainable, is because there is inflation, and in an inflationary situation, the government isn't increasing tax brackets quickly enough to keep up with inflation, and so there's this stealth tax being paid. And I think that's all fair, but the point is still that does make a difference to government revenue. So the second point about this is that when we look at revenue, expenditure hasn't been changing very much. Revenue has been increasing. So those are two important things to bear in mind about the fiscal situation. The third thing then is bringing that together. And obviously, when we look at the balance between fiscal expenditure and revenue, we come up with a fiscal balance, the fiscal deficit, as it's been in Japan for many years. And this is obviously the most important thing, because this is the balance. This is what ends up adding to government debt or taking away from government debt. Now, again, it may not be a big surprise, given what I've said over the course of the last 5 minutes or so, that when we look at the fiscal position, the fiscal balance in Japan, actually the fiscal balance is also improving over the course of time. And the important thing about these two fiscal events, the supplementary budget that Takaichi introduced when she first came to office, and then the draft budget for fiscal year 2026, even including those two events, it doesn't change the picture, which is that over the course of the last number of years, the steady trend in the fiscal position has been for the fiscal balance, the fiscal deficit, to narrow. And so actually, even with the supplementary budget, which was announced with a lot of fanfare as being this very big increase in expenditure, even after including that in the fiscal position for fiscal year 2025, the fiscal deficit is still projected to narrow. And the fiscal deficit coming off on the initial budget for 2026 is expected to narrow further from the results of the supplementary budget for fiscal year 25. The point is that the trend is still narrowing. The fiscal impulse, as economists would talk about, is still negative. Now, you can argue it's not negative enough, that in this situation where debt is so high that the government should be more fiscally conservative, that they should be running a fiscal surplus. And of course, that's all true, right? Like, if the government wants to be bringing down debt in a more rapid way, it should be targeting a fiscal surplus. But the point is, I think, it's very difficult to look at this kind of charts and this information, which I've talked about over the last 5 minutes or so, and really think that the Japanese government is doing something reckless at the moment. It may not be conservative enough for some people, but it's not like over the course of the last 3 months, the Takaichi government has come in and thrown caution to the wind. It's really not like that when we look at the data. Now, so one of the things that I mean, obviously, like in a sense, this is the government's fault. And I say that because the government has come in and made this big thing about, fiscal policy was too tight previously, that we need to do something about this, that therefore we're going to spend a lot of money. So there is a narrative coming from the government, which is then reinforced when people look at simple interpretations of the data to make a lot of people think that actually the government is doing something crazy. Now, I think there is a parallel here, and that parallel is Abe. So the Prime Minister in 2013, who set off this big train of monetary easing, and if you go back and remember what Shinzo Abe talked about at the time, and his narrative for this was these three arrows. So the first arrow is monetary easing, all the stuff I talked about, the BOJ buying all of these bonds. The second thing was fiscal easing. The third thing was structural reform. Now, I think, I would make the argument, and I sort of try to address this with a few people, and I'm not sure many people buy it, but in any case, I'm going to try to present it here because I think it's interesting. Shinzo Abe is seen as being Takaichi's mentor, right? Like, she's his disciple. Like, she looks up a lot to what he did in office, and his approach to governance is something that is informing the way she approaches both the economy and politics in Japan. That economic policy, again, under Abe, was all about easing monetary policy, easing fiscal monetary policy, and hopefully doing some structural reform. And so in that sense, Takaichi is doing what her mentor did. She's coming in and talking about fiscal easing. But I think also actually the reality of Shinzo Abe was there was no fiscal easing. Like if you look from the time when he took office, except for the big blowout in COVID, and you might want to say that, well, I think that was an exception, right? Like it was something very different happening with the economy. Except for that period of time, again, the fiscal deficit in Japan was steadily closing. The reason why taxes have increased by about 5 percentage points of GDP over the course of the last 10 to 15 years is because Shinzo Abe did twice increase the sales tax. The reason they're talking about cutting the sales tax at the moment is because it was increased to 10% under the mentor of the current prime minister. And so I think in that sense, actually, like Takaichi is very much Abe's disciple, talking about fiscal easing, but actually really so far looking much more fiscally conservative. Now, with all of that, I've addressed the first two fiscal events I talked about. So the supplementary budget and the main budget for fiscal year 26. Now, there's still another thing outstanding. And the other things outstanding is this announcement that's been made during the course of the election that the sales tax is going to be cut. That's going to cost around 1% of GDP, about 5 trillion yen or thereabouts. So perhaps what's going on now is that the new government is going to be like. The whole point of the election is that Takaichi wants to get more power. She's a minority government, so she's constrained at the moment. If you call an election, then she's going to show her full features, right? She'll be able to do everything she wants to do. And so what we've seen so far in these previous budgets is really like, because she was constrained, she didn't have much freedom. If, and it's still a big if, given the politics in Japan, if she now wins a majority, she comes back into power, she has much more freedom to be, much more reckless with the fiscal policy and so on. And that is what now the market is focusing on with this pledge to do something about the sales tax. Now, that could be true. And this, it could be that she comes back with a big majority and is much more crazy. Like, I'm still skeptical about it. And the two reasons for saying that is, one, most of the opposition parties in Japan have been pushing for a cut in the sales tax, for more fiscal easing. Like, most of the people sitting in the legislature in Japan looks to me like they would have voted for more fiscal easing in the supplementary budget and in the main budget for fiscal 26. And yet the LDP didn't go down that road. So I think there's probably more constraints within the LDP and within Takaichi's administration that looks obvious from the outside. The second thing, and this is something to be watching for, is so far this isn't a pledge so far to cut their sales tax in an unfunded way. Instead, what she said, it's not going to be financed through. It's not going to be financed through deficit financing, but she hasn't said how it is going to be financed. Now, obviously, that is the problem, right? Because if you're trying to argue for like a policy where things aren't fiscally reckless, like you have to be able to say how things are going to be funded. And I think economically, there is a good argument in Japan to do something about the tax burden that consumer household sector faces, because over the course of the last 2 years, the central policy has been to reduce social expenditure on the household sector, as well as increase the sales tax, which squeezes household income. So, and given that the big macro weakness in Japan's economy at the moment is the weakness of consumption, the big area of strength in the economy at the moment is how big corporate profits are. There is an argument that the government should be taxing the corporate sector more and giving more of that money to the household sector. And if that's what the government does, then I think actually all of these proposals that have been announced in the last couple of weeks or so actually are positive for Japan's economy. But we don't know yet. And the market right now is taking, I think, what happened with the perception of the supplementary budget and the main budget for 2026, and saying that means that the government is on a fiscally reckless course. When I join the dots between these two things, it really doesn't look like that at all. And therefore, I'm more willing to give the government the benefit of the doubt that actually fiscal policy is more constrained than people are currently assuming. Now, that's all on kind of like what's happening with the deficit side of what's going on. So what's happening with current expenditure and current revenue. The one other thing we need to talk about when thinking about the fiscal position in Japan is what's happening with the debt. So I talked about that a bit, right? Like it's very high as a percentage of GDP, much higher than the rest of the world. Obviously, this is a big number. But there is an important detail of this, which is also worth bearing in mind when thinking about whether Japan is jumping off a fiscal cliff. Now, that is because when we think about government debt and we think about interest payments that the government needs to make on that debt, it's not that the government just has liabilities. The government also has assets. And when we look at the net debt position in Japan, as this chart shows, the net debt position is much better than the gross fiscal position in terms of debt. The reason for that is because the government has financial assets. It doesn't just have financial liabilities. So it's not just borrowing in terms of JGBs. It also has money that it's investing in terms of, holding different financial instruments. Now, that's particularly important at the moment. And again, if we think about the two big influences that Abe has had on Japan's fiscal situation, one is that the revenue side increased by 5 percentage points of GDP, a very big structural change and something I think is important. The second thing I think that's happened is a restructuring of the asset side of the government balance sheet. So if you look at this chart, this shows the structure of the liability side. So this is how the government is borrowing money. And basically, it's borrowing money by issuing JGBs. And again, that's why when JGB interest rates go up, it's such an important issue for the market. Now, this second chart, this looks at the structure of government's assets, how the money that the government has, how that's being invested. And this is very important because this shows that over the course of the last 10 to 15 years, there's been a big change in the structure of the government's balance sheet. So if you go back and look at it, 15 years ago, before Abe came to power, essentially, what you saw was the government had a lot of its money still in low yielding government bonds in Japan in particular. And what's happened since then is now the government has a lot more money invested overseas, and it has a lot more money invested overseas in bonds, but also in equities. Now, part of this process is the GPIF, the government pension fund in Japan, which was pushed by Abe to invest a lot more money overseas and to take a lot more risk. Now, that was being done when the yen was around 100. The yen now 160, just in terms of currency translation effects, obviously bearing in mind the hedging policies that the GPIF might have, but just in terms of like the central translation effect, this has already been a very good investment for all of those government funds that put money overseas back in 2013 or thereabouts, because the yen has depreciated so much. But the other thing this means is like this build-up of the change in the asset side of the government balance sheet is that as much as interest rates have been rising on the liability side, Japan is also benefiting from all of the stuff that's happening in global financial markets. And obviously, two developments are important. One, equity prices have gone up a lot at the moment. But the second thing is interest rates in the rest of the world have also gone up a lot. And so what's the importance of that? When you go look at the data which extend to the first quarter of 2025, that's the most recent data that has been published, we can get data not just for the government's payments it needs to make on interest rates, but we're also looking at the interest receipts that the Japanese government gets from all of this stuff it's holding overseas. That's important because if you go through the course of the first quarter of 2025, essentially Japan was getting more revenue in interest payments than it was making out on the interest payments it needs to make to the JGB, on JGBs. So essentially it's got like the fact that interest rates are rising now is going to affect negatively the government's fiscal position. That's not to be debated. But it's going from a position where, from a net interest rate perspective, actually Japan has been in a very good state over the course of the last, 6 to 9 months or so. So it's very unclear to me why. I mean, obviously, if interest rates continue to rise and rise forever, then even like Japanese interest rates become much higher than interest rates in the rest of the world. That then becomes a big problem for the Japanese government. And obviously things can change. But where we are right now, it doesn't seem that is the most likely situation. because the government's interest rate payments actually are in quite a good state at the moment. So it seems to me like we've got several things to talk about, or several things to be thinking about in terms of where the JGB market is going. One is like there has been a structural improvement in the government finances in terms of the flow, and that's because revenue has gone up, and revenue is still rising at the moment. The second thing is expenditure is being contained. And again, I didn't show this chart earlier, but the chart here, this shows, I think this is really important. This is looking at social security payments that the government makes out to the household sector. And again, like, you know, the population is aging, and yet social security payments haven't been rising since about 2015. So this is one of those examples of fiscal restraint, which I think has been important in Japan. So the expenditure side is somewhat constrained. And the third thing that's going on is interest payments, or the interest structure of the government is also much more beneficial for the government than is often realized. Now, that's where we are. So what does that mean? Now, the market at the moment is sort of, so maybe I'm wrong, right? Like, and there's something that I'm missing. Maybe it is that Takaichi, the thing I'm missing is that Takaichi is actually like really, you know, she's not like Abe at all. And she actually really is a heartfelt fiscal loosener, and all that she needs in an election to come back in and really manifest that, and that is possible, right? Like, and something to be cautious of. But my view on it, as things stand at the moment, given the evidence of the course of the last few months, is actually the fiscal position is much less bad than people think. The government's fiscal loosening is much more cautious than a lot of the market tends to think at the moment. And therefore, in this situation, given how quickly JGBs have sold off, it seems to me that actually most of this sell-off has probably now been done. And actually the likelihood is that we start to see JGB yields start to peak out, or at least from the fiscal position, that there's an opportunity in the bond market, because this is not the situation of the Japanese government driving off a fiscal cliff. And that, I think, is one of the things that the market is assuming at the moment. So I think there's an opportunity in JGBs because of this. Now, when thinking about JGBs and the yen, like, it's not enough just to think about fiscal policy. And I think that's maybe another thing to, you know, explain why there's been so much volatility in the JGB market over the course of the last few months or so. And I think actually another big thing that's going on is just because the economy has been rebounding, inflation has been going up, and as a result of that, the market needs to price that in. And so if you're running a situation where inflation in Japan is 2% and there's 1% real growth, it really doesn't make sense that long-term interest rates are, 1 or 2%. They should be higher than that because of the nominal growth that the economy is achieving. So that's another thing that's being priced in at the moment. And the third thing, which again is probably most important now in thinking about the markets and what could happen, I think the other component of why JGBs have been so weak and why interest rates have been rising so much through the longer end of the curve is because of BOJ policy. Now, why does that matter? Because BOJ policy is essentially to keep interest rates very low. So the policy rate in Japan right now is only 0.75%. It's been a lot of work to get it through to that level. The BOJ has been very cautious about increasing interest rates further. And the relevant point about that for thinking about markets is because when the BOJ makes these announcements about interest rates, even when it hikes interest rates, it's been at great pains to say that we remain very accommodative. The interest rates are going up, but this isn't meant to over-tighten. We're quite worried about how far we can move interest rates, that we need to be quite cautious. And so when every time it announces an interest rate hike, it also says that interest rates in real terms are remaining very negative. And I think this is the other reason why both the JGB market has been weak, but also the yen has been weak. It's because essentially you have a central bank that's always saying we're behind the curve, or always at least saying we remain very loose. Interest rates in real terms are very low in Japan. They're negative in Japan. So if the BOJ and the central bank is already it's so highlighting that fact, it's one of the things I think that keeps money leaving Japan, because in that situation, the yen should be selling off. And if the yen is selling off, then you also shouldn't be holding JGBs, and money should be leaving the JGB market as well. So I think in thinking about, my view would be that the yen is too weak and JGBs have oversold. In order to change that situation, there obviously needs to be some trigger. And I think one of the obvious triggers in that would be a more aggressive BOJ, that when it talks about interest rates rising, starts to envision a situation where the policy rate in Japan gets to a neutral level and is no longer negative in real terms. That's something I think in terms of a trigger to be looking at, to think that the yen can start to reverse and the JGB market can also start to behave more in a less volatile way. So, talked about the fiscal situation in Japan today. I think there's some things to be suspicious about the market narrative about how fiscally reckless Japan is and whether Japan is running off a fiscal cliff. Given my analysis, I think JGBs are cheap. I think the yen is also too cheap. And we need to be looking for a trigger that could start to turn things around and to change sentiment. And I think one of the obvious triggers there is what the BOJ says in the process of raising rates, how it starts to describe that interest rates at the short end won't be negative in real terms anymore. As I said, I'm Paul Cavey, the founder of East Asia Econ. A lot of this, the charts supporting this analysis, I've shown some in this video, but there's a ton more on the website. And we produce a lot of analysis looking at all of this stuff every day. If you found this video useful, please subscribe. And otherwise, if you have any comments, then please make some comments on this site or get in touch with me for more details. Thanks very much.